Okay, hi, good morning, everyone. Today we have with us the management of Nishant Garg. We have this another series of Corporate Connect that we are doing. We have Mr. Nishant Garg with us. He's the managing director of Maiden Forgings. And we'll be talking a bit more about the company today, understanding the company's prospects, future prospects, and the current proceedings that where they are today from where they've come. And without hogging more time and without taking up more space, I'll let Mr. Nishant Garg to speak from his own self about the company, how he's brought the company where it is today. So Nishant sir, over to you. Please.
Thank you, Miraj. Good morning, everyone, and I thank you all for joining us today, and Arihant Capital for giving me this opportunity, and Miraj for arranging the entire event. So, thank you, everyone. Now, coming to Maiden Forgings Limited, it is a legacy that is 35 years old right now, and my father, late Sri Sanjay Garg, started uh, as a proprietor in 1988, and post that in 2005 Maiden Forgings Private Limited was came into post. Then next milestone came in 2011-12 when I joined the business after completing my MBA. So in 2005 the company had three equal shareholders and directors, my father and two others from outside. And in 2011-12 it became a completely family owned business, with me, my father and my mother being the equal shareholders and directors. At that point of time, the entire business of proprietary was brought into Maiden Forgings Private Limited, and there was only single company. The total top line in 2011-12 was approximately 13 crores, and there were two major product lines, that is carbon steel bright bars and wires. After that, uh, in 2013, the second another milestone came in where we added alloy steel bright bars and wires to our product line. Post that, in 2015, we established our second production unit, which was five times of the first one. And there we also added our fifth product line, that is stainless steel bright bars. Then in 2018, we added with the sixth product line with an upcoming third production facility, which was again similar in size to the second unit. And we added the sixth product line, that is stainless steel wires. Then came in 2021, wherein we started exporting our seventh product line, that is collated nails and plastic collated and wire collated nails, adding our seventh product line. And now we have also started with the stainless steel nails. So in 2021 we started by getting the job work done for these products, since it's a forward integration of our wire products. So we started getting job work done and exporting it to the US markets majorly. And in last year, with our own internal accruals and some machinery loan, we installed our own manufacturing facility for this seventh and eighth product line, that is collated nails and stainless steel nails. So the plant was established by February 2023, in the beginning of this year. And this is a totally imported plant from Taiwan, uh, uh, fully automatic, and a forward integration of our existing products. This product, now we have started with the in this financial year itself, after the trials and everything has been done, we have started with the production of this product. And currently the plant has reached approximately 20% of its capacity, which we target that in next 3 to 4 months we would be reaching the highest utilization, and then we will expanding further for increase in quantities of these products, since right now we would be only producing approximately 300 tons, which is a small quantity of this highly demanded product. So coming to the top line, like I said, in 2011-12 we had two product lines with a top line of 13 crores. Coming to 2022-23 financial year, the top line was 221 crores that we closed, and we have eight product lines right now, all the processing being done internally in-house at Maiden in its three production units that currently exist in a total area of around 1,25,000 square uh, feet. And all the plants are well equipped with entire testing facilities. We have a well equipped team, experienced team with the people from ex Tata and Escorts kind of team that lead the marketing team of our company. We have a total of around 125 people in our team, and further, we are post listing since we got listed on BSE on April 6th. We have been expanding this team and targeting not just B2B markets but B2C markets as well. So talking about the current scenario, the PAT last year's PAT we closed at 9.6 crores approximately, and further the plans are to expand this team and increase our existing export markets, mainly in US and Europe for these product lines. Also recently, latest development is that we got approved by a Fortune 500 company. Our plant got approved, which is a US based company, a Fortune 500 company. So we got approved from them for our supplying our products, and that company is into sale and purchase of trading of all these products that we produce, all 8 product lines of ours. So we would be supplying worldwide. So that will be another boost in our export sales. As well as in domestic markets, we are, as like I said, that we are targeting B2C markets. Coming to the financial part, the company has been completely financially disciplined throughout its span. Uh, we are enjoying loans at approximately average rate of 8.5 to 9% kind of interest rate, and that is due to the excellent performance of the company financially. Uh, and other than this, if we talk about the markets, and we are catering almost to most of the industry, be it automobile industry, be it engineering sector, be it home durable sector, home appliances sector, oil and gas sector. So these all form our market, and we have around 450 odd customers in our portfolio currently, which was pre-lockdown just at 250. So we are in post-lockdown, we have almost doubled the numbers of the customers that we cater, and it includes brands such as TTK Prestige, we are supplying directly. Then Interarc, Kirby, and Everest. These are the few of the biggest top three PV builders in the country, and we are supplying to all of them our bright bars. Other than this, we are supplying to the OEMs of multiple automakers such as Maruti, Toyota, Hero, at two-wheeler, four-wheeler, and heavy vehicle industry. So this forms the entire market segment of our company, and we are currently more focused towards export markets as well as the B2C markets for our collated nails and wire products, which can be utilized directly by customers. We are our strategy for this year is building entire distribution channel as well as online channels for our sales. So we are reaching the maximum exposure that is possible to our products. Further, we are participating aggressively in multiple exhibitions held worldwide. For example, this year we are participating almost in 3 major exhibitions of our industry to be held in August, September, and October. And next year we are participating in an exhibition in Germany, which is one of the biggest player for our industry. So the basic strategy is building brand, reaching the B2B and B2C markets through various channels possible. That is the physical distribution channels as well as the online distribution channels, as well as direct sales in B2B companies worldwide. So this is the journey so far, the present and the future that we are targeting at. Just before we open for our next round, of Q&A. I'll just, because the collated nails are a bit new product for a layman, so that's why I have kept few samples, to just share like what is the product. These are the automatic pneumatic gun nails that we are producing. This has been produced at our facility itself, and these are plastic collated nails that I was talking about. So these are produced at our factory.
Nishant sir, I think there's some issue on the internet connectivity side. Um, The video is paused. Yeah, participants, I'll just reconnect with Nishant sir. Just give me a minute. I'll just check what exactly is the issue. Just give me a minute. Yeah, apologies for that. Nishant sir is joining in again. I'll just before he comes back, he'll just finish the brief and then we can move to the Q&A section. So I request whoever has a question to just raise the hand, or they can put the questions in the chat box. We'll take the questions from there. So if you all have any questions, you can either raise the hand or put it in the chat box. Yeah.
Yeah, sorry for the technical glitch. So like last I was saying that these are the products that we are producing for the pneumatic gun nails, the latest item, which is our forward integration. And so yeah, that was from my side. I thank you all, and now I think Miraj will carry forward the meeting.
Yeah, thank you so much. So we can start with the Q&A section. If anyone has questions, please, I request you all to raise hands or put it in the chat box. While the questions are being accumulated, sir, I have a few pre questions that we got before the meeting. But I'd like to start off with that first, and we'll in the meanwhile we'll just wait till someone anyone has the
Correct.
questions. So starting off, sir, the first thing that we want to know that one of the important points that we had found in the Q4 performance uh, was that you had mentioned that the delivery time that you all have
Right.
is a very big differentiating factor, which has helped you a lot. I'd just like to request you from your own words only, with your own words only, if you could just speak about it and how that has helped you differentiate yourself from the peers, and if there are any other differentiating factors like that that have actually majorly impacted the performance, helped the performance a lot.
Definitely, I left that point out during my presentation. Actually, see, Maiden Forgings has three main differentiating factors that makes us competitive, as well as gives us an edge. The first and foremost is the variety of products that we cater under single window, because these are interrelated products being used by, for example, an auto OEM. They require stainless steel, carbon alloy, all three types of steel, bright bars and wires when they are manufacturing some of their products, right? So from Maiden they get it under single window. Specifically, the size range is very wide, plus we can do specific profiles and all. So that gives us an edge because the OEM doesn't have to run everywhere for different products, and they can come directly to Maiden. And Maiden is the only company in entire India that is producing all three types of steel under a single roof for these products. So first USP is that. And coming to the delivery model, we have intentionally made a delivery model over the years, wherein, for example, the carbon steel bright bars and wires, where the industry standard says 1 week to 10 days of delivery is the standard, we are delivering within 2 to 3 days, maximum 48 hours to 72 hours kind of delivery. And in stainless steel, where the industry standard says 60 to 90 days kind of delivery, we are delivering within 30 days. So that is the intentionally built model, very strategically planned, and that gives us edge because firstly, we are giving just in time kind of deliveries, and ultimate consumer or the customer, they don't have to put up that much inventory cost because of us. So that is, and also the consistency of delivery is very good. So that gives us a premium from the customer because they can trust us about, like, we will deliver every time. So there are no production losses due to line stoppage for our customers. So that forms our second USP. And the third USP is that quality. See, every company claims for quality, but when I say quality, I mean that we are doing some of the monopolistic jobs. We are selling bright bars, which is a commodity, but in that also, there are multiple specifications, and due to our infrastructure and facilities, we can produce, and the team, we can produce every kind of profile that is available. The customers give us drawing, and we can supply that. Plus we are doing some monopolistic grades such as 303, 310, such grades we are doing, which are uh, you know which are being produced in India by very few number of suppliers. So that forms the third USP of our company. So we are supplying many tedious jobs that other company are unable to do. So these are three major differentiating.
Perfect. Thank you so much for that elaborate answer. Sir, so just let's just start off with this point, as you mentioned about that in the third point that you mentioned, there are very few players that have, that can make the products that you're making. Can you just talk a bit more about the competitive edge that you have, about, any competitors that are there in the segment? I know there are a few different products that you're making, but
Right.
how would you, how are you placed compared to the competitors that gives you the edge, as you've already spoken about? So just a bit about the competitors that you, if you can speak about.
Right. See, for with us, because we are providing eight interrelated products under single roof. For every kind of product, be it for stainless steel bright bars and wires, we have different set of competitors. For nails, we have different set of competitors. Carbon steel, we have different set of competitors. The thing is that everywhere, firstly, the system, this is a bit uh, very unique kind of a strategy, that we just don't run after quantities and volumes in a single product. We expand, like I told you the history from 2011 till 23. We have every 2 years we have added on in vertical or horizontal expansion of our products. So we sell limited quantity to the best of the customers, that those whose requirements can only be fulfilled by Maiden. So that gives us a very high retention rate of the customer, firstly. And secondly, we get around, I think right now we are getting 10 to 15 new inquiries every day on just through the, advertising and online portal. We are getting 10 to 15 new inquiries every day, out of which we can at least, 10 to 20% we can convert into our permanent customers. So this way, there are numerous competitors, but they are product wise. There is no, you can't make apple to apple comparison for Maiden Forgings with other companies. So that is the
Understood.
right.
Yeah, sir, we have one question from a participant, Miss Samira ma'am. I'll just unmute you. You can ask your question.
Uh, good noon, sir. Am I
Good.
audible?
Yes, very much.
Good noon, sir. Good noon, everyone. Um, Sir, it's really great listening from you. Sir, I have a question that since your company is now targeting to get into exports mainly into US and Europe.
Right.
So 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 uh, what we have been reading so far that there is an ongoing slowdown into both these countries. So does that affect your business in any way? What do you think about that?
See, it differentiates, but if we talk about the products that we are offering over there, like I'll explain it with an example. US is buying approximately $84 million worth of collated nails from various countries right now. That is a data which is public. So $84 million worth of nails every year they are importing. This is just US data. Germany is buying $63 million worth of nails. Okay, and UK is buying $62 million worth of nails. So we are non-existent in those markets practically. We are just selling, I think, 0.00001 kind of percent of the total sales as of now. So we this is a product this is basic product that is being used in the construction industry over there. And with the rising population and everything, maybe there is a recession right now, but there would be peak times also. So we are starting at a very right time. This is a very right time of entry, and plus we are creating our own brand over there. So we are also targeting the online channels in the US and UK, not just India. So it's a very right time to grasp that market. And after we complete the current plan that we have executed, we have implemented, if we reach the complete level of its utilization, then also we would be just supplying 0.01% of the market share. So we have to increase and expand, and obviously in peak times we would be able to take advantage. We have lots of markets, and Europe and US are in slowdown, but currently also, if you notice the custom data, the demand for these products is very high because they are not producing it in house, because their labor cost and everything is very high, and it's somewhere a labor intensive industry as per their standards. So
Thank you, sir.
we are currently not facing any such challenges at the moment.
Thank you for sharing those insights. Thank you.
Yeah, thank you, ma'am. Sir, I'll just continue with the next question till we have more questions. As we spoken about on the call about the value-added products, the high-margin products, can you just give us a brief? What is the current proportion of value-added products right now, and what would you intend for it to be in the future? And what would be the margin differential? So, this gives a perspective about how the margin profile of the company will move from current to right now to in the near future.
Right. See, we started with carbon steel, bright bars, and wires initially in 2011-12. So at that point of time, the margins were higher. But right now in carbon steel, we are just getting 8 to 10% kind of gross margins. Okay, but as we added products, every time we added products that were better in profitability than the earlier items, and stainless steel and some special grades of stainless steel are the items that gives us maximum margins till now. That is approximately around roughly around 20 to 25% kind of gross margin. And if we talk about nails, see, right now, like till now, whatever investor meets I had, okay, I was just claiming that we would be getting 25 to 30% kind of margin. So I keep the stance same, but in actuality, we are getting much higher than that because we are also reaching the retail customers. So there the margins go even double, triple kind of thing. But that segment is very low. And currently, if you talk about like for last year, I'm talking till March. Okay, the contribution from such items, such high margin items, was around in the total turnover. It was just around 8 to 10%. Okay, and this year we are targeting that we would be reaching 25% kind of level of these products, high margin products, this financial year. reaching 25 to 30%. So that is our target for this year, and this will gradually increase because the focus is entirely, the top line will increase, but the major focus for the company and the company's strategy is bottom line.
Understood. That's actually very elaborate answer. I think that is important. That is an important aspect. So you're going to plan to take it to 25%. That's very nice to know. So next, I wanted to know that we've started with the exports. We've now we are actually planning in the geographies, as you said, North America and Europe, and later on, if I'm not wrong, you're going towards Africa also.
South America and Africa.
South America and Africa, yes. Sir, can you tell us about if you're going to go through the distributor route, or how are you starting? Because just to refresh my own memory, in the Q4 call, you had mentioned that you would also go through rented warehouses procedure. You would also do white labeling. If you could just just give us a small understanding how you are planning to take the entire distribution over there.
See, I'll give you example. It depends on region to region. Like for US currently, we have appointed an agent, okay, who has his own warehouse as of now. So we would be practically, it's because he is getting fixed commissions on the quantities, and we have that cushion over there. So we are, you can say that we are going with our own kind of warehousing, be it to the agent. And for Canada, what we are doing is, since we would be reaching the consumer markets also, there the tie-up is such that we would be doing some kind of profit sharing, because the value addition is much higher, because we are reaching the ultimate retail customers and wholesale stores. So there we are partnering with the person. So this is how it's going to be. It depend, go region on region basis, based on how much a reliable of a partner we get in that region. So see, business is very much about trust and commitments. So since we have a good linkage in Canada, so we are going on a different model. So we would be forming separate entities with those partners over there and going for this.
Understood. Yeah.
And online channels, and one part remaining. Online channels everywhere we are doing directly through Maiden Forgings Limited.
With your own brand. Okay. Understood. Sir, we have a couple of questions in the chat. I'll just take that. One of the participants wanted to know if you could name the top 5 or 10. If you could just tell the share of revenue of the top 5 or 10 customers, just to understand the concentration risk, if there is any concentration risk.
I think top 10 customer will not account for more than 10 to 15% of the total share.
Okay, so that is actually diversified.
Like I earlier said that we had 250 customers pre-lockdown, and post-lockdown we have 450 customers. At that time, we were doing almost 75% of the sales in the auto sector, and we had, I think, top 10 customers were taking 40% of the total share of our sales. So we changed the strategy very tactfully, and we brought down the exposure to the auto sector to 25%, and the number of customers to 450, so that our risks are divided, in terms of market segmentation. So that was a planned strategy, and right now top 10 customers just have around 10 to 15% of the total.
Perfect. Another question was if you could tell us about if there are any other efforts undertaken to improve the gross margin, the expansion in gross margin in your margins. Apart from the new products, are there anything that you've done in cost cutting, or any other activity that you undertaken?
Like earlier, I think I said that we are with time. It is a time that we are expanding a lot, introducing new products and everything. So overall, the stocks, the kind of employees that we have, the manpower costs, the electricity cost, every cost was going higher, because we have to introduce the products and sell it. We have to do certain trials. So we are optimizing all these costs, as well as we have currently the plants are located in 3 locations. So we are still on a lookout for some place which is cheaper than our existing plant, because these plants are in the heart of the city. right? So we are trying to consolidate those plants within a year's time or so, so that that will maximize our efficiency, the administrative efficiencies as well as the process efficiencies, since we can operate in single location. So that is underway. So we are looking for improving those efficiencies also, though in first quarter itself we have improved on our costings overall, just by through keeping a close watch and monitoring the processes and cut the unnecessary cost wherever it was possible.
Understood. Right. There are a couple of more questions, but there's Mr. Puneet Chawla has also raised their hand. I'll just let him ask his question first. Puneet sir, you can please ask your question.
Hi, are you able to hear me out?
Right, Puneet.
Yeah, hi Nishan. Thanks for giving this opportunity. I have one question related to your exports. So since you're planning to do more exports, so what is the impact you see on inventory, receivables, and net working capital? Already we have a lot of borrowings in place. So how do you plan to deal with this working capital when you're pushing for the export side,
Right.
along
See,
with inventory challenge?
Right. See, we would be having internal accruals, and so the borrowings have to go low. The ratios have to improve this in this financial year. And as far as the inventory, because I see in the chats as well, there was one question about the high inventory holding and all. So I think this will address both the question. Like I just said that we were in expansion mode. We brought in 2 3 new products within last 2 years. So at one point of time, to generate sales, you need to increase your inventories. You have to get the trials done. You have to keep all kind of stocks. Okay, once the system is smooth, which I expect would be done in this within this quarter, the collated nails plant, like I said, that it would be running on the maximum capacity by the end of this quarter as per my expectation. So then comes the optimizing part. The stocks, the inventories, those would be optimized, because then we would be knowing that what are the regular sizes, what is the demand of this particular SKU, and accordingly we would be optimizing those inventories. As far as per industry, I think our inventories would always remain a bit higher. The reason being this fastest delivery model, like I said, but inventory costs versus the premium that we get from the customer for just in time deliveries every time, that we have calculated multiple times, and the premium is always higher vis-a-vis costs. So that gives us an edge, that gives us an enhanced market as well as premium from the customer, because they are saving inventory cost and production line losses because of us. So we get a nice premium over time. So I think inventories are slightly higher than the industry standard, maybe. I'm not sure about that, but that gives us a larger premium. But yet we would be optimizing it, I think, within next 2 quarters, once this collated nails market is stable.
Yeah. And the second question would be regarding this nails part. So I read somewhere, I think I maybe in some notes earlier, or maybe in the conf call, I don't remember it. But these nails would be used in real estate industry also somewhere. And
Yes,
if
somewhere.
yes, what plans we have to tie up with the bigger builders in India?
No, see, it won't be used direct in India. It won't be utilized directly with builders ever. It will be more used in packaging industry and this furniture industry.
Yeah. So
Towards that,
because
and hardware industry.
exactly. But since you're going towards B2C brand also, so
Right.
that's where my question is coming from on this part actually.
Right.
So
In B2C also, the furniture manufacturers, the modular kitchen manufacturers,
yeah,
such kind of consumers and customers would be buying from us. It won't be used. I don't think it would be used directly by the builders in India. Builders in US and Europe would use them, because at the coastal regions and everywhere there are wooden houses. That
yeah.
is the reason for high consumption in US and European markets of this
Mhm.
product. So there the builders use them, but in India, I don't think builders would be our major, target customer base.
Okay. So in such a case, if a manufacturer like IKEA, which is opening such
Yeah, right.
stores, and
Right.
can we supply to IKEA or tie up
Yes.
with IKEA
Yes,
in such
we
a
can.
case?
Yes, we can. IKEA uses it.
Yeah.
IKEA use it. And
Okay.
I think our product is going till IKEA via channels as of now.
Okay. Yeah.
I'm
Good to
not
know.
sure, but one of the stockists that is buying from us, I think he provides to IKEA.
Okay. Sure. Yeah, that's all from my side. Congratulations and good luck for the future.
Yeah, thank you, Puneet sir. So I'll take the next question from. There are actually a couple of questions which I think we can
In the
answer
chat,
jointly.
in the chats.
Yeah. So it's
Yeah,
one.
I have already done till C part of this.
Yeah, the inventory that you've already answered, the high
Right.
inventory which is
Last was D
needed.
part is any plan to raise fund in near term, right?
Yeah,
So
and that I think, sir, we can also answer with the dividend distribution policy. You can just, come round it out to with your IPO that came in the end of March this year. If you could, tell us about, the IPO proceeds that are going, I think that would answer both these questions at once.
see, out of the IPO proceeds, we reserved around 8 to 9 crores for the fixed investment. That would be used primarily in the for the doubling of capacity of this collated nails plant once we reach 80-90% kind of utilization level, which I expect by September. So once we are done with that, so we would be investing in that. And the remaining part has been for general corporate expense purposes and working capital. So remaining entirely is for working capital. So in this year, we don't have any fundraising plans because it will be sufficient for our current expansion. As well as the internal accruals should be good. So this financial year, there is no plan as such to, get into it. Further, the strategy would be decided. There is a rough layout, but once this product is there in the market and seeing the response, we would be going for further expansions. So at that point of time, we would have to see how much we have from our reserves as well as how much we require. So I think we would be going, but as of now, it doesn't seem that in short term we would be raising any kind of funds because internal accruals would be good. Plus, we have certain plans which will give us additional capital from our internal accruals. So,
Understood. And in that respect, if you could also speak about the dividend distribution policy, if you have any.
Right now, as of now, I wouldn't comment on this. I think it will take another 1 to 2 months for us to decide. So then we can get back to it.
Absolutely. So just circulating back on one of the points you said while in the last answer that you have some other plans through which you will be getting funds. Just let me know if this is that the plant consolidation activity that you're actually undertaking that will be undertaken soon. If you could just speak about this plant consolidation, it's two plants that you're merging into one in a different location, and how would it enhance the capacity or help in cost savings and the outflow or inflow that you would receive from this?
This could give us an inflow of around or 20 crores once this is executed completely. Uh, we are under the process of there are certain technical hassles over there, like related to approvals and everything. So we are trying to figure that out right now. We are working on it. So it will give 20 odd crores if we sell both the plants and go for a new land 10 kilometers away from this location and consolidate them. So this will give us firstly efficiency in terms of we can reduce some amount of debt, like say 5-7 crores out of it, because remaining debt is at a very cheaper rate. So after payoff of 5 to 6 crores of debt, the ratios will be excellent and the performance would be at what we can say at the best possible permutation combination. So that is the plan from there, though. So one efficiency would be in terms of debt, and second efficiency would definitely, because the processes would get optimized with a single location, so there would be saving in terms of administrative costs, and the process might get also a bit faster or optimized in terms post consolidation. So we are looking for that, right?
Understood, understood. That's actually one of the points that also that I was intrigued with during the Q4 con call. So there's one more question from the chat box. Nikhil sir wants to know that if you could just give the exact nature of products that you make. So just circulating back to the understanding of application of the product, if you could, just brief it up where the exact application. So as you said that it's used in the furniture industry, if you could.
I was also just reading that question. So, see, Nikhil ji asked that, how his question was, how are they different from other forging companies? See, forging companies are doing mainly hot forgings. Whenever you hear name forging, they are doing hot forgings and all. Okay, so we are producing steel bright bars and wires, which is a product of bright bar and wire. Now these nails are part of forging industry, but this is cold head forging. Okay, so this is a different product line entirely. So we are basically bright bar wires and quality nails manufacturers, and these products have application in the auto sector. For example, I will just break it down for a layman. For example, the car steering that you have, it is covered by the PVC, but the entire backbone structure is bright bar. It is a bendable steel with particular qualities that are required for particular mechanical properties that are required for making a steering. It should be hard, it should be bendable. Okay, so there we supply for car steering. Then there, the suspension rod has different kind of application. Then the door handles and door knobs and the leash that you use to close the doors. So those are made with different material properties. So bright bar and wire are such products that we change the mechanical property of the basic steel grade, and it can be used in all the applications that I named, be it lock industry, ताले के ऊपर का जो portion होता है उसके लिए, and for other than this was auto sector and appliance home hardware industry. Then these nails are manufactured out of the wires that we manufacture. So you are using our products every day. It's just that you don't know that they are called bright bars and wires behind the scene, but every person in day-to-day life is using bright bar multiple times in a day. So that is the difference. And you can say bright bar and wires are processed steel, which are the entire market of steel sector that is there. Out of that, 20 to 25% of the steel is being used in these forms after getting processed. So that forms our market segment. So that is how we are a bit different from others. Otherwise, I have already told the USP, that 3 USPs due to which Maiden survives. Right.
Yeah, sorry, perfect. There was one more other question in the chat box. If you would have any plans to enter the powder metallurgical products like Sundaram fasteners, if you would be aware of that, sir, or about what Sundaram fasteners is doing, or if you could just give us if you're going to plan to enter that or no.
As of now, there is no planning. Since like I said, that this year's policy has three basic things: uh, creating a brand presence first, second, creating offline physical distribution channels, third, creating online channels. This gives us access to a larger market once these three things are done. Okay, and the next step is going for all the forward integrations possible in bright bar and wire industries, which are still very profitable and manufactured by only a few suppliers. So through those distribution channels, as well as in the same brand umbrella, we would be selling multiple products using the similar channels. Okay, so that would be our strategy of expansion in the future. We're leveraging the brand value that we have created over next 1 year, 1.5 year, and distributing different manufacturing and distributing different products that we can, interrelated products that we can, supply to the end consumers. So that would be our basic strategy. And yes, like I understand why this metallurgical products and powder has been asked. So in future, yes, we can look for it once
Understood.
the land and distribution channel is created.
Understood. Right. So there was one more point that was mentioned on the call about a product called oil tempered wires
Right.
that you would intend to take
Right.
going ahead after you fulfilled certain. Yeah,
Correct.
if you could just take it away from there, if you could just speak about
I
it.
already, like I said, the last answer itself, like I told you that the purpose is creating the distribution channel as well as the brand value, right? So brand awareness and visibility. So once that is there, like I said, that whatever horizontal and vertical product lines, we can expand it. In the call also, I said that, we are doing R&D on the oil tempered wire, because that we have started like 1.5 years back, right? We are still discovering the markets, possible, the kind of margins we can enjoy, the PLI incentives that are being given by the government. So that is under process. Once we are done with this, we have captured this nails market nicely, then we would be definitely going for such products there. That is just one of the products that we mentioned, because we have been working on it for 1.5 years. But right now, like after listing, as we started working like one of the listed companies, so so the strategy team that we have right now, the people we have appointed recently, we are finding many lucrative opportunities, and we are trying to capture those opportunities first, which I think would be the most beneficial for the investors of the company. So we are looking for
Understood. Right. So that's really brief, sir. As I think we're coming to a close of this session, I would just like to ask one of the most asked questions by investors. So what would you say about the guidance about the company going ahead in the future and the margins? If you could just talk about that. That's something, one of the most asked questions always. What do you think about the
see,
future?
I'm very bullish on a high growth. Okay, because see, like recession वाला question भी आया था मेरे पास अभी कि अभी recession चल रहा है US और European economy में. But Indian market, with the growing population, such products are meant to grow. So I'm very bullish, especially for coming 7-8 years, like 2030. So I am very much bullish on the growth of brand India, and along with that on growth of brand Maiden. And as far as the margins are concerned, like I said, the strategy is entirely focused on the bottom line. We are working, we are doing mostly forward integrations now instead of vertical integration. So that gives us additional profit in terms of 2 or 3 products together combined. So definitely the bottom line is meant to increase, and it will increase in a good ratio in the coming years. So I'm bullish about the bottom line as well as the overall growth of the company.
Right. And would you be able to give some figures of how you expect the top line to grow from here till FY 24, 25, 26? Would you be able to, or would you refrain from answering that?
I would actually refrain from answering that due
No
to
worries.
guidelines.
That's completely fine. Yeah. So with that question, sir, I think we've answered a lot of investors' queries, and I'd like to thank you to come on this call and take your time out and explain about your company and answer a lot of questions. I'd also like to thank the investors and the audience, the participants that are there today to spare the time and get to know about this company. I believe that this is according to us at Arihant Capital also, there's a very bright future for this company ahead, and we've also come out with a note after the Q4 con call. I'll be sharing the note again with in the public domain, and yeah, and also for the participants, this video we'll be uploading on YouTube, and we'll be sharing the link also. So if you've missed out on some point or anything, you can revisit the video. Like to thank once again Nishant sir. Sir, if you have any closing remarks from your end.
I would like to, thank everyone for joining us today and giving their time, and Miraj for organizing it excellently, and Arihant Capital for giving the opportunity to be with investors of the company and potential investors as well. So I would thank you all once again, and I typed that same thing in the
Yes,
chat
I just
as
saw
well.
that.
And as well as I got some good suggestions over here, like some gentleman, Mr. Ashok type sintered bush is a good profit item. So definitely I would be looking out for that. I have already noted that. Thank you everyone.
Yeah, thank you so much, and if we'll look forward to having you again on this series in the coming quarters. Thank you so much. Thank you so much, everyone.
Thank
We
you.
can end the session now.